Bank reconciliation statement. Almost all business entities maintains Cashbook to record bank transactions. If all the transactions that are entered in the Cashbook match with those in the bank statement, there will not be any difference in the bank balance as per the Cashbook and bank statement. In practice, this does not happen. Often, the balances as per Cashbook and bank statement are different, so reconciliation becomes necessary. Bank reconciliation statement is a statement that explains the reason for differences between bank balance as per Cashbook and that as per bank statement, as on a particular day. Let's understand the various reasons for these differences. Number 1. Checks deposited but not cleared. Bank takes time for check clearance. Usually, local checks of other banks take 2 to 3 days, while outstation checks take 5 to 6 days for clearance. Due to this collection lag, difference may arise in the balances shown by Cashbook and Passbook. For example, check worth $5,000 deposited on 6th May 2026, but not cleared till 9th of May 2026. Bank balance as per Cashbook will increase by $5,000 on 6th May 2026, whereas bank balance as per Passbook will not change till the check is cleared on 9th of May 2026. Number 2. Checks issued but not presented for payments. When payment is made by check, there may be lag in clearing of check due to delay in presentation and collection of check. As soon as a check is issued, Cashbook is credited, whereas bank debits party's account only when the check is cleared. For example, check worth $4,000 is issued on 5 May 2026, but not presented till 9th of May 2026. On issue of checks, 5th of May 2026, bank balance as per Cashbook will decrease by $4,000, whereas Passbook balance will not change till they are presented for payments 9th of May 2026. Number 3. Direct payments or collections by bank. Sometimes banks are given standing instruction for making certain payments. For example, payment of life insurance premium. Receipts are directly credited to bank account. Such direct payments or receipts are not recorded in the Cashbook until the current account statement is received or instruction is received from the paying party. Number 4. Dishonor of checks. Checks deposited into banks for collection are sometimes dishonored. Bank debits the amount of dishonored check to customer account, along with dishonor penalty. No effect is given on the Cashbook about the dishonored check until bank's advice reaches the business entity who deposited the check for collection. Let's prepare reconciliation statement. Reconciliation can be made starting from one balance and sorting out the reasons for differences one after another till the other balance is reached. Let's assume if one can start with balance as per cash book. All such transactions are to be added which have reduced the cash book bank balance. And all such transactions should be deducted which have increased the bank balance as compared to the balance as per current account statement. Let's understand the detailed format of bank reconciliation statement. BSR, starting with cash book balance. Bank balance as per cash book. Add checks issued but not presented for payment. Direct collections by bank. Direct deposits by debtors or collection agents. Interest credited by bank. Less. Checks deposited but not cleared. Direct payment by bank. Dishonored checks and related charges. Interest and bank charges. Balance as per Passbook. BRS, starting with Passbook balance. Bank balance as per current account statement. Add checks deposited but not cleared. Direct payments by bank. Dishonor of checks and related charges. Interest and bank charges. Less. Checks issued but not presented for payment. Direct collections by banks. Direct deposits by debtors or collection agents. Interest credited by bank. Bank balance as per cash book. Thank you for watching, guys. If you found this video helpful, hit that like button and leave your valuable advice below. And please subscribe to our YouTube channel so you never miss an update, and share it with your friends.